Ladies and gentlemen, good day and welcome to the Jindal Drilling Limited Q4FY25 Earnings Conference Call hosted by Antique Stock Broking Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Varatharajan Sivasankaran from Antique Stock Broking. Thank you and over to you, sir.
Thank you, Muskan. A very good afternoon to everyone. On behalf of Antique Stock Broking, I would like to welcome all the participants and the management of Jindal Drilling to this conference call. We have with us Mr. Raghav Jindal, Managing Director, and Mr. Kaushal Bengani, Deputy General Manager, Investor Relations and Finance. Without further ado, I would like to hand over the call to the management for the opening remarks to be followed by the Q&A. The floor is yours, sir.
Thank you, Mr. Varatharajan. Good afternoon, shareholders, and thank you for joining our earnings call. The key development in Q4 FY25 was acquisition of rig Jindal Pioneer on 5th March 2025. The acquisition was pending for some time and we are pleased that it was concluded in this quarter. Revenue and EBITDA improved due to this acquisition and full quarter operations of Jindal Supreme. Further improvement is also expected in revenue and earnings in Q1 FY26. I will briefly summarize key financial indicators. On comparison of Q4 FY25 with last quarter, Q3 FY25, our revenue improved by 4% to 264 crores. EBITDA increased by 7% from 81 crores to 87 crores. PAT increased by 8% from 49 crores to 53 crores. And EPS increased from 17 to 18 rupees per share. On comparison of financial year 25 with last financial year 24, our revenue improved by 37% to 884 crores. EBITDA increased by 19% to 237 crores. PAT increased by 24% from 114 to 141 crores. And EPS increased from 39 rupees per share to 49 rupees per share. The improvement in earnings was expected and was communicated in earlier calls. I would now like to take you through our earnings presentation. The first slide talks about Jindal Drilling and our brief profile. A key point to note here is that in this quarter, after acquisition of Jindal Pioneer, we now own 3 offshore jackup rigs and additionally operate 2 jackup rigs with ONGC, with the 6th rig being currently under refurbishment. The details of each of these rigs are on the next slide. Order book position has been updated with a new contract of Jindal Explorer also being included. Order book stands at 1,791 crores. The amortization of order book rig-wise, year-wise is given on slide 6, which will help interested participants in understanding how our revenue will pan out based on the current contracts that we have. I have already spoken about the financial indicators and would now directly go to slide 11, which details borrowing. Our gross debt has fallen from 282 crores in March 24 to 139 crores in March 25, and net cash position has improved from 51 crores in March 24 to 131 crores in March 25. Going forward, we expect net cash position to improve further, and it is on the basis of the internal accruals that we will generate that we will be able to discharge purchase consideration of Jindal Pioneer. There will be no requirement of any debt to fund that acquisition. The shareholding structure is on the next slide, and that will conclude our presentation. I would now request Mr. Varatharajan to kindly open for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask question may press star and one on the touchtone telephone. If you wish to remove yourself from question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Mehul Pujiani from 40 Cents. Please go ahead.
Thank you so much for the opportunity, sir. Sir, I'm new to I'm tracking this company very recently, so I just want to understand, because I'm new to oil and gas sector and rigs, etc. So is there some correlation between the oil prices, the crude oil prices, and our business? I mean, if the crude oil prices go up, does our prospects, potential business for business increases?
There is a definite correlation because we are an oil and gas industry participant. So correlation with oil and gas will always be there.
So is there any predictability in the correlation, or it is it depends on the market and everything? I mean, if we let's say, if we say that for every $1 of increase in the price of crude, is there any correlation which we can establish?
There is no fixed formula. It depends on the participants available in the market, the number of rigs available. There is a general trend, but there is no specific formula-based correlation that you are seeking.
All right. And sir, my next question is that is my understanding correct that all our rigs are operational with ONGC except the Mexico rig?
Yes. We've detailed the contracts and the position of these rigs in our presentation.
Right. And also, I was going through some data. Is there a price revision in the day charge with ONGC in the last 2 quarters?
Can you repeat? Is there a price revision in?
Yeah. Have the price been revised? The daily rig prices with ONGC have they been revised in the last 2 quarters?
Yes, and it has already been mentioned in the presentation. I would urge you to go through that.
So the prices don't change by the quarter, it changes by the contract.
Okay. Okay, sir. Thank you so much. Yeah, thank you so much.
Thank you. The next question is from the line of Nirvana Ladha from Badrinath Holdings. Please go ahead.
Hi, good morning. Thanks for the opportunity and congrats again on a great quarter. I'm sure the next few quarters will also be great. However, my question is regarding the new rate that we have received for Jindal Explorer. So that rate at 35,000 seems to be lower than the rate that we managed to get even during the last cycle. So if you can detail what led to this phenomenon of sudden collapse in rates, because the last time I think Mr. Jindal had mentioned about his expectations of rates, it was somewhere in the $60,000 range. I know that's completely up to the bidding process, but there's a big delta from where our expectations were and where the rates finally landed. So can you give your explanation as to why this happened, and what is your expectation for contracts that are coming up for renewal in 2025 and H1 26 for Jindal Drilling?
So definitely, it was quite a low rate. ONGC had cancelled the last two contracts, and the third one also it had not come to any outcome. I believe there were some competitors who had 3 rigs standing, and they were very desperate for a contract, and they did not assess the markets very well. Out of the 3 rigs that were to be contracted, there were about 7 participants, and they dropped the prices down to this level. But which they realized that, the difference between their bidding and the person who was L2, their bidding, there was a substantial amount of $25,000 in between. So I'm guessing they learned their lesson by leaving that money on the table, and hopefully it should not be repeated again.
Okay, so
we do expect it to go up drastically again in the next quarter, in the next tenders whenever they come in, which is going to be late 25, early 26.
Okay, that's heartening to hear. On the same lines, Mr. Jindal, I've asked this before, and I think as an investor, I would like to again, hear you on this. See, this was a clear case of ONGC strategically, either intentionally or unintentionally, playing things out such that Indian players, Indian rig owners who choose to contract with ONGC exclusively, they were put in a situation where, rates came out to such low levels. So, as the promoter, do you think that having all our eggs in the ONGC basket is still the right way to go? As an investor, I would like to understand, for example, we decided that Pioneer should also come back from Mexico and start working with ONGC in Indian waters. So can you help me understand why are we, in spite of these dynamics, why are we still comfortable having all our eggs in the ONGC basket? What prevents us from having some diversification in Mexican, Brazilian, or other waters to avoid situations like this? Would be very helpful to get an understanding of this thought process.
Yeah, no, we don't want to put all our eggs in one basket, but how we had an opportunity in Mexico, we did go for that. Similarly, we are looking at opportunities all around the world, and we will go with the best opportunity and whichever is the best option for the company and the rigs. Like Saudi Aramco in the middle had laid down a lot of rigs, leading to a lot of uncertainty. They again have laid off 3 or 4 more rigs in this quarter. Hence, in the international market, the rates are flexible. It changes and they can cut your contract at any time. Hence, we always thought ONGC, at least we have a steady contract and the price remains the same. Saying that, Jindal Pioneer is of Mexico. If it gets a contract back in Mexico, we'll be happy to put it there. If it gets somewhere in India, whether it's ONGC or any other contractor, we would be happy to do that as well. And we are open to it, looking for opportunities in the Middle East as well. So we are doing whatever is best for the rig and the company at that point of time, rather than just saying that we will only go with ONGC or we will not go with ONGC. We are taking the best opportunity that is available for the rig at that time.
Okay, sure. So that's heartening to hear. And sir, one more question since I have you on the call. Is there any plan for Jindal Drilling to utilize some of these cash flows into other kinds of offshore or oil and gas assets other than rigs? Do we plan to exclusively continue to be an offshore rig player? I'm asking that because of the deep cyclical nature of offshore rigs in particular. Even onshore rigs are less cyclical. So that obviously causes these boom and bust cycles. So is there any plan of utilizing our cash flows to diversify slightly in a related area, or in the near future we continue to be fully in rigs?
No, we are not only going to be there with the rigs offshore. We are looking at different opportunities. We are already in the space of directional drilling and mud logging. We are looking at different related services as well. And as in when we get some feasible options, we will be looking into it more strategically in India or outside.
Okay. And last question from my side. Can you give any outline as to on what timelines we plan to bring more assets exclusively under Jindal Drilling, specifically talking about Explorer and Virtue One? Are you in a position to give some kind of guidance?
No, I don't think so. We have any such plans in the near future. But yeah, the consolidation is always there in the mind, but I don't have any timelines for that.
Okay. Thank you.
Just to add to what Mr. Jindal said, whenever we do go ahead with consolidation of these entities, since they are related parties, we will have to approach shareholders for their approval. So communication in advance will be provided to all shareholders.
All right. Thank you.
Thank you. The next question is from the line of Darshil Chaveri from Crown Capital. Please go ahead.
Hello. Good afternoon, sir. Hopefully, I'm audible. Firstly, congratulations on a great set of numbers, sir. Hello.
We can hear you.
Hello. Yeah. Okay. Thank you, sir. So, sir, just wanted to, get a sense of your upcoming year. So I think in the presentation we have, given a very detailed, bifurcation. So, with this, I think we can expect around 900 crores of, revenue. So, just wanted to know, is there any, because I think Jindal Pioneer gets, is there only for the half year. So, any additional revenue we can forecast in this, or how would it flow through? That's my first question. And how would the margins look right now? Like, we have done a good 35% margin, so we can assume that will be now our base margins?
For the revenue part on Jindal Pioneer, we will have to wait till the new contract is finalized. We cannot estimate that right now. For the margin, you can take a blended margin of around 35% for the entire year.
Okay. Fair enough, sir. And so just wanted to know, like, I think you answered kind of a bit in the previous participant, but I was reading somewhere that ONGC is very aggressively wanted to cut the rig cost. So we've had like contracts at a bit of a higher rate. So do we expect like the 45,000 to be a good range from now onwards, or any sense that you could give? I understand no commitment because it's a tendering process.
It's a very low range, and I don't think so. ONGC was also expecting it to be coming down so drastically. Like I said before, it is just a mishappening by a competitor to bid so low. Even ONGC had not expected such low rates. So definitely that's not the new range. We will still be targeting the 60s or higher in the coming tenders.
Oh, okay. That's really great to hear, sir. And so just wanted to know, like, we were talking, okay, we are open for diversification and everything. So any concrete, like, discussions and targets we've seen, or, we can expect in this coming year, or how would you, give, if you could give a brief timeline for the process, like, how would we look at, and what areas or what kind of matrices are we looking at, sir, in terms of if you want to expand, sir?
So I don't see anything in the current year as such, but we are in talks with various companies for various services or maybe acquiring different assets. But it'll only be, we will only be able to do it if it's feasible, and if we get an opportunity. We would not be investing in anything without a contract. So it's like what you get when.
Oh, okay. Fair enough, sir. Yeah, that's it from my side, sir. All the best. Thank you.
Thank you. The next question is from the line of Sandeep Dishti from Aljaz Partners. Please go ahead.
Hello, can you hear me?
Yes, sir, we can hear you.
Hello? Okay.
Mr. Mr. Sandeep, go with the question, please.
Okay. Can you hear me?
Your voice is not audible properly.
Okay. Just one second. Is this any better?
Yes, sir.
Sorry for that. The 18.3 crore share of associates that were booked in the last quarter, is that only Virtue One?
It is Virtue One for the entire quarter. Sorry, Virtue Drilling for the entire quarter, and Discovery Drilling also for the entire quarter, but the revenue or the income of Jindal Pioneer was accruing entirely to Discovery Drilling till 4th of March.
Right. So this 18.1 crores would presumably go down sharply as we acquire Pioneer. Am I right?
So since we have acquired it, this figure will decline, but the overall profitability of Jindal Drilling will increase because now revenue of Jindal Pioneer will accrue entirely to Jindal Drilling.
Fair enough. Fair enough. So the other question was with regards to the revenue drop potentially in FY26. Given that we'll have two contracts expiring in FY26, is it fair to assume, obviously we don't know what the renewed contracts will be at what rate, but as a big assumption, can we assume that the revenue of FY26 will be lower than FY25?
That is not correct. I will urge you to refer to slide 6 of the earnings presentation. The order book has been detailed on this slide. In FY26, we have given a figure of 898 crores. Most likely, the revenue will be higher than this because we have given a conservative figure over here. The revenue in FY25 was 828 crores. So, even after giving a conservative figure, the revenue shows an increase of 70 crores. In reality, I think we will cross that figure and positively surprise shareholders.
But sir, this 898 includes Virtue One. Now, given that we are consolidating it below the bottom line, this 240 crores, will it be part of your revenue?
Sir, I'll interrupt you. There is a difference between Virtue One and Virtue Drilling Pte. Limited. We are consolidating Virtue Drilling Pte. Limited. The rig is not getting consolidated.
Thank you, sir.
Profitability of the company gets consolidated, which is Virtue Drilling Pte. Limited.
Okay, thank you very much. That explains it. Can I squeeze in one more question?
Yes,
with
please.
your permission?
Yes, please.
The typical refurbishment time, can we assume 2 to 3 months?
No, sir. It will be longer than that. For rigs which are expected to be deployed with ONGC, refurbishment is usually 5 to 6 months. And that is also the time which is given by ONGC.
Okay. And the billing and revenue starts only after it is deployed?
Correct.
Thank you, sir. That's all my question.
Thank you. A reminder to all participants, you can press star and 1 to ask question. A reminder to all participants, you may press star and 1 to ask question. The next question is from the line of Manikant from Investment Wealth. Please go ahead.
Hello, sir. Am I audible?
Yes, sir, you're audible.
Okay. As usual, so congratulations on the stellar quarter. My question is regarding the rigs that are going to end in like Discovery One, Jindal Pioneer, Virtue One, and Jindal Star. So most of the things are ending by mid of July, 2026. So when will the bidding process be starting? Like, is it 2 months before, or because we have a refurbishment time of 5 months, like you mentioned? So, like, post refurbishment or while in the refurbishment will go ahead, or are the talks already in progress for few of these?
For the rigs that you mentioned, contracts are ending in middle of 2027 financial.
26. Yeah, correct.
And once the contract ends, then it goes for refurbishment, and then it gets deployed on a new contract.
Okay. And like you mentioned, that you are exploring even the other parts of, not just for ONGC, you are looking deployment of Pioneer at Mexico side or other places. So, do you see better rate compared to what we are seeing here? Currently, the rig rates at that places.
I would not put the 35,000 that we've got right now as a benchmark. But yes, there are different rates at different parts of the world. So is the cost in operating these rigs are different. And we will be looking at this analysis and going with the best option.
Okay. And so, like,
the uncertainty, everything counts. Sometimes the prices are higher in the Middle East, but there's uncertainty about the continuity of the rig.
Okay, got it. And coming to the order book, like FY26 looks solid, like you mentioned, 898 looks to be a conservative number. But going ahead, FY27, 28, with the current situations, how do you see Jindal drilling performing across next 2 to 3 years? Like, so do you see a bright vision going ahead, or do you see any big stops that you are anticipating now itself?
The next contract is scheduled to be awarded towards the later part of the year after the tender comes out. We don't expect rates of 35,000 going forward. It is a one-off due to some special situations which was in play. That situation will not continue going forward. Therefore, new contracts will be at a higher rate. If you look at the rates at which Discovery 1, Jindal Star, these two rigs, they are deployed at 48,324 for Discovery 1, and Jindal Star is at 44,000. We expect day rates for these rigs to be much higher. Since day rates for these rigs will be much higher, then the revenue that will accrue to us will also be higher, and consequently, we expect, subject to getting good rates, the revenue for FY 27, 28, 29 to be in line with whatever we have done in FY 25 or FY 26.
Got it. And coming to the debt part, like this year there was like good amount of debt reduction plan. So is this the way forward going? So can we assume that the debt will be going below 100 crores, or like how is that going to be?
Yes, I've already said that debt will continue to reduce aggressively, and we are net cash right now. So the debt is only at a gross level.
Okay. Sir, that's my next question. Like, what's the plan with the net cash? Like, do you have something that are in the pipeline already, or what's the plan with that?
We have purchased Jindal Pioneer on the 5th of March, and we have to make the payment to the seller.
Okay. Got it. So the cash will be used to make payment to the sellers.
Mostly, yes. And then once rigs get dehired, then there is a certain amount of refurbishment cost which gets incurred, for which we require cash flow.
Okay. Yeah, that's it from my side. Thank you.
The next question is from the line of Nirvana Laha from Badrinath Holdings. Please go ahead.
Hi, thanks for the opportunity again. I just wanted to know what is the payment schedule for the acquisition of Jindal Pioneer?
It's a deferred payment schedule. The entire payment will be completed within 1 year.
Within 1 year. Okay. And when do we expect the subsidiary to return our part of the cash?
How? So you're talking about shareholder loans?
Yeah, we also have extended debt to the subsidiary, right? The subsidiary that owns
Joint venture.
Jindal Pioneer.
We don't have any subsidiary.
Yeah, sorry. The joint venture, yeah.
We've given shareholder loans to the joint venture. Their rig is also operational. So as and when they get the cash from their operations, they will repay us. If you look at the loan to joint ventures, it has come down from last year, and I think in this year, full repayment is expected.
Okay. All right. Thank you.
Thank you. The next question is from the line of Darshil Jhaveri from Crown Capital. Please go ahead.
Hello. Thank you so much for taking my question again, sir. So just one small bookkeeping question. What can we expect our effective tax rate to be, sir?
It will be lower than 25% because we've acquired the rig, and I'm talking about the current tax rate only. It is likely to be. It will be lower than 25% because we have acquired the rig and we get accelerated depreciation.
Okay. And just wanted to know, our rig in Mexico, would that also help us lower our tax rate, or that's taxed at a full rate only, sir?
It's taxed at the full rate because the income accrues to the Indian entity.
Oh, okay. Fair enough. And just one more question, like when we talk about industry, like the bidding, you explained that there were a few cancellations and that is why they wanted to desperately get the order and that led to lower rates. So currently, are those other rigs in some utilization, or, like we just hope that the similar situation doesn't come to us in the later half of the year when these are again wanting to, just offload their rigs and work at maybe a minimal cost for them, right? So are the currently like those rigs and the cancellations are still occupied, or they are, like, if we have any knowledge about that part, so that would be could give us a good indication.
Out of the 3 rigs Greatship had, 1 has gone into ONGC, the other is also contracted somewhere, and 1 is lying idle. So yes, they only would have 1 rig to offer in the next contract.
Oh, perfect. That's really helpful, sir. Okay, thank you. That's it from my side.
Thank you. The next question is from the line of Sandeep from Alder Partners. Please go ahead.
Hello, sir. Can you hear me?
Yes, sir.
So, sir, slightly more a longer-term question. If business as a whole, if I understand correctly, the key drivers of growth are the rates, which are subject to demand and supply, and 2, leveraging your balance sheet as you acquire more assets. Now, given that we have a sort of limited visibility on the demand and supply as we go into renewables, would you be looking to leverage the balance sheet for acquiring assets? And the reason I'm asking this question is, last quarter you had mentioned that as of now, there are not much assets available because the market is in a uptrend.
There is no limited visibility in terms of the operations of the company. Tenders will be issued by ONGC as per their schedule, and we are the largest offshore drilling contractor with them. We will be the biggest beneficiaries. As and when the tenders come in, we will be participating, and naturally we will also be awarded some contracts. The point that I think which you're trying to make is that the fluctuations in oil and gas cycle will continue to have an impact on us. So that is a correct statement, and it is the nature of the business that we are in. We cannot de-link ourselves from the fluctuations in the oil and gas cycle. We can minimize it. And that is the way we expect the business will continue. We have done really well over the past 2 years, and we will see record revenue and profits in FY26. Regarding the desire for debt, we are debt averse, and that is the reason why we have survived in this industry for so long and have become a market leader. So we do take debt to acquire assets, but we try to repay the debt as early as possible.
Yes, Mr. Sandeep, does that answer your question? Mr. Sandeep? As there is no response from the participants, we'll move to the next. The next question is from the line of Pankaj Motwani from Equirus Securities. Please go ahead.
Yes, thank you for the opportunity. So my question is, like, I have a follow-up question on the rig rate. So, like, you have highlighted that the rig rate were mostly because of the aggressive bidding as for the decline in the rig rate. So, like, I just want to understand, could the, like, broader market dynamics, like the impact from the Saudi Aramco cancellation of the rig rate of the contracts, of the rig contracts in the last year, like, they had also contributed to this softness in the rate? Like, just trying to understand, like, if the global factors has also had an impact in the Indian market.
So yeah, in general, everything does have a little bit of a impact, but none of those rigs are suitable for the Indian market or coming into the Indian market. So the pool of rigs that are there for the Indian market remains where it is unless someone has a big investment and changes their rigs for the Indian market. So there is a certain aspect that does have an effect, but not majorly.
Okay. And just to get a sense of competitive landscape, so, like, how many rigs are currently available in Indian market for this, especially for the ONGC tender?
There were 7 rigs for the current tender of 3 rigs. So 3 got contracts, there are 4 left. But it's a cyclical process. 2 more rigs from Jindal are coming up next year. So someone might give their rig somewhere else. So that's the kind of.
Got it. And just so.
And going forward, right now ONGC has their demands less. That's why they're coming out with less tenders, because they are having some meetings with BP to streamline their process. Once that's done by the coming year, their demand would increase substantially. So we would be looking at higher rig counts within ONGC as well.
Got it. And one more question. So, I just want to know the rental charges for the Jindal Star and Virtue and Jindal Explorer.
We are not disclosing that. For Jindal Explorer, since it's owned by another listed entity, it is $23,000 and it is in public domain.
So with the renewal of this,
for the previous contract.
Yes. So for the new contract, like, what will be the rate for the Explorer?
We don't know right now.
To answer you, Jindal Drilling would only benefit further. Jindal Drilling does not bear any losses to operate the rigs for the coming tender as well.
So you are saying the contract will be.
The low rates of Jindal Explorer would not really affect the profitability of Jindal Drilling.
Got it. Okay. Yeah, that's my questions. Thank you.
Thank you. The next question is from the line of Sambhav Bajaj, an individual investor. Please go ahead.
Good afternoon, sir. I want to ask one question that in last call it was written that for Jindal Pioneer that the rate was $40,000, but it has been written in the order book that $36,500 only. And second thing about the same is that I think the contract will cancel, or it was told that in December 2025, but it has written in the order book as September 2025.
The rate of 40,000 was applicable from 1st of June. So I think that is what you're referring to. And the duration is based on an estimated number of wells. The contract that we have with the charterer is based on the number of wells rather than a fixed timeline. So as and when time progresses, we get better clarity. So the September 25 for this particular asset may not necessarily be September 25. It can also be August or it can be October, because it depends on the number of wells which have to be completed by the rig.
Okay, sir. And one question I want to ask that, what is the other business of discovery drilling? Because both the rigs we have bought that. So anything on that?
There is no other business.
There is no other business. Okay, sir. And operating expenses have been come down. So this is because of pioneer rent which we are not paying or some other thing?
It is because of that, because revenue will increase since on Jindal Pioneer there aren't any operational expenses that we have to incur.
Okay, sir. One last question. Explorer, there is any Explorer refurbishment will happen in that 5 to 6 months, that is, in which time we are not deploying with the ONGC?
Correct. So Jindal Explorer is under refurbishment as we speak. It is expected to be redeployed on the new contract in November or maybe a little earlier.
Okay, sir. Thank you, sir.
Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask question. A reminder to all the participants, you may press star and 1 to ask the question. If there are no further questions from the participants, I now hand the conference over to the management for closing comments. Over to you, sir.
So thank you to all the participants. I hope the presentation has cleared all questions, and we look forward to participating and talking to you in the future as well.
Thank you, Mr. Jindal, for taking time out from your schedule. And thank you, shareholders, for participating. In case of any further queries, please feel free to connect on the address mentioned in the presentation. Thank you.
Thank you. On behalf of Antique Stock Broking Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.